Cryptocurrency advocates are hoping a new president will boost the industry by championing a more friendly regulatory environment. The sector's PACs are investing a fortune in supporting candidates that favor a lighter touch. The winner of the 2024 election will also appoint new leaders to the SEC and other agencies that govern digital assets. That means their choices will have huge implications for the future of cryptocurrency. Trump's pro-crypto position. Cryptocurrency is a hot issue in the presidential election, with investors pouring millions into campaigns hoping to shift regulations in their favor. Trump has embraced the industry with big promises, but Harris and the Democrats are playing catch-up and trying to court the crypto crowd with a more friendly stance on regulation. In a move that smacks of political calculus, Trump has taken a bold stand on cryptocurrency, touting his plan to make the United States the crypto capital of the world. His pro-crypto position allows him to set himself in direct opposition to leftist crypto skeptics like Elizabeth Warren while appealing to an audience that tends to be younger and male. Trump's embrace of crypto also makes sense from a business perspective. He has teamed up with Lummis and launched a new venture to trade digital assets that he is actively promoting on his social media accounts. The company is generating revenue and could see its value grow dramatically if he wins the presidency and pushes through legislative changes that help the crypto industry. While Trump's embrace of crypto may be good for the market, it is troubling because he has long been able to meld his political and financial interests. His campaign is rife with conflict of interest allegations and has been accused of using the White House to promote his hotels, golf courses, sneakers, Bibles and shares in his social media company. Moreover, Trump has been heavily criticized by the cryptocurrency community for his antagonistic stance on the Securities and Exchange Commission, SEC, chaired by Gary Gensler. A Trump win would be beneficial for the cryptocurrency market because of his hands-off approach to regulatory issues. However, it may introduce more oversight that could stifle innovation or stabilize Bitcoin's price over the longer term. A Harris win, on the other hand, would be more detrimental because she has expressed a desire to regulate crypto. As such, it is likely that the winners' respective stances on regulation will have an outsized impact on the cryptocurrency market in 2024. A bearish scenario: cryptocurrency has gone from a niche interest to global phenomenon in just a few years. As a result, it has changed the way we think about money and finance. However, the future of cryptocurrency depends on its security and regulation. Advances in cryptography and key management, as well as clearer laws governing the industry, are essential to ensure that cryptocurrencies remain secure. Despite these challenges, crypto is still on the rise. In 2024, it could become a household name, and it could even replace cash in some countries. Investors' attitudes toward crypto will also impact its growth in the future. The bull and bear market cycles can have a significant effect on how people invest in it. Keeping track of these cycles can help you take advantage of them, as they may provide opportunities to buy crypto at low prices and sell it for a profit during a bull market. A bear market is associated with a weak economy, as businesses struggle to meet their revenue goals and consumers are reluctant to spend. This leads to declining profits, which can affect the way investors value stocks. There are different types of bear markets, including cyclical and structural ones. Cyclical bear markets occur when economic declines lead to reduced investor confidence, lower stock prices, and higher unemployment. Structural bear markets, on the other hand, occur when fundamental changes in the financial system or economy impact investor sentiment. Several factors can contribute to a bear market, including economic changes, monetary policies, and geopolitical events. Inflationary pressures can reduce consumers' purchasing power and lead to a decrease in the economy, while interest rate changes can raise borrowing costs for businesses and investors. Additionally, global political turmoil and economic uncertainty can create heightened risk aversion among investors and lead to stock market declines. In addition to these factors, bear markets can be impacted by individual company performance and balance sheet weaknesses. Earnings disappointments can trigger sell-offs, while high debt levels and weak balance sheets can depress investor confidence. Additionally, a change in monetary policy or an inverted yield curve can lead to decreased investment capital and a drop in stock prices. A bullish scenario, once dismissed as a fringe interest of tech evangelists, cryptocurrency has skyrocketed to mainstream popularity and trillion-dollar valuations. However, with such rapid growth comes risk, especially for investors who are unable to closely follow digital currency markets on a daily basis. Unlike traditional stock markets, crypto assets are constantly shifting in value on a daily basis. In fact, the ebb and flow of this market is so volatile that it's sometimes difficult to identify longer trends like bull and bear markets. In short, a bull market describes an upward trend while a bear market indicates downward movement. Cryptocurrency bull runs typically take place when demand for an asset reaches its peak and supply begins to run low. Investors often see an opportunity to buy an asset at a discounted price, which can fuel its rise in value. However, a cryptocurrency's price can also drop if it receives negative news or if the general public loses confidence in its long-term prospects. While many cryptocurrencies are volatile, some have fixed values that are tied to real-world assets and earn them the name stable coin. This type of cryptocurrency is more stable because it can be used for buying products and services in a given area without requiring a third party to verify the transaction. As a result, these currencies are used as a way to circumvent traditional financial controls by dissidents in authoritarian nations. It also helps people in those countries move money abroad without the need for a bank to block or charge fees. The appeal of cryptocurrencies has grown so much that the US government has begun crafting rules to control this rapidly evolving industry. The progress of these efforts could have a major impact on the future of cryptocurrencies, particularly in the United States. As regulatory clarity grows, more investors will be able to invest in the space and companies will be able to create new products that can benefit consumers. In addition, the emergence of new technology could shift the current market trend in another direction. For example, a new network called IOTA is designed to connect Internet of Things, IoT, devices and provide secure data transfers without the need for a central authority. A divided government cryptocurrency is no stranger to political risk. Investors are keenly aware of how the 2024 election could reshape the digital asset markets, particularly as candidates outline their stance on cryptocurrency regulation. A Trump victory is seen as the most likely, but even a win by Kamala Harris could have implications for the sector. With the two major parties split, a divided government will create an opening for bipartisan legislation that can help the crypto industry. This is a more realistic scenario than a unified Republican administration, which would require the support of some Democrats to pass any significant crypto-related bills. The cryptocurrency industry has already committed massive sums of money to this year's elections, funneling more than $119 million through independent groups like Fairshake. That's enough to rank it second in total corporate campaign spending this election cycle, behind only fossil fuels, according to Public Citizen. Those contributions have helped fuel a Trump-supporting faction within the crypto industry, led by the Winklevoss twins' Bitcoin investment firm Gemini and Kraken Exchange co-founder Jesse Powell. The group's ad campaigns, backed by venture capital firms such as Andreessen Horowitz, have been critical to helping pro-crypto candidates win key races. For example, Powell helped fund a pro-crypto super PAC that launched attack ads against Democrat Katie Porter in California's Senate race, which she ultimately lost. Another group, the Cedar Innovation Foundation, spent $10 million to try to unseat Democratic Senator Sherrod Brown in Ohio. A Trump win will also allow the cryptocurrency industry to reclaim some of its luster from the Securities and Exchange Commission's crackdown on exchanges, which began under Gensler's leadership. If the SEC is left to its own devices, it could focus on enforcement and investigations of individual assets rather than on broader industry policy issues. A Trump victory could also give legislative initiatives a better shot at passing the Senate. The 60-vote threshold in the upper chamber makes it difficult to get anything passed without a solid majority, but a more bipartisan approach could ease the hurdle. A Democrat in the White House would still be a big challenge, but crypto advocates are working to improve the party's relationship with the industry.